Welcome to the deep dive. We're here to cut through the noise and really get to the heart of complex issues.
Glad to be here.
Today we're tackling something pretty unique, a real financial minefield. What actually happened to Russian-American depository receipts, ADRs, on the U.S. markets?
Yeah, this isn't your typical investment story. It's much more about geopolitics colliding with, well, regulations. Regulatory warfare, essentially.
Exactly. We're going to be tracking the journey of these assets. They started as freely traded stocks, but now they're effectively frozen solid.
That's right. Our focus today, our deep dive, is really analyzing the source material that details the status of these Russian ADRs, specifically after the full-scale invasion back in early 2022.
So if you, our listener, happen to be holding these assets, or maybe you were just watching this unfold, the big question is, how did U.S. sanctions and Russian countermoves manage to create what some are calling a perfect financial blockade? Why are these securities just trapped, highly illiquid? And maybe most importantly, what's the actual legal and financial reality for U.S. shareholders right now?
And we'll show, based on the sources, that this wasn't just a market dip or a crash. It was really an unprecedented regulatory decoupling.
Decoupling, yeah.
You had two legal systems basically working against each other. One trying desperately to block the assets, the other trying, essentially, to bring them back under national control.
And the result?
Total immobilization for foreign investors. A complete freeze.
Okay, let's unpack this. We need to start at the beginning, right? February 2022.
Yeah, the initial shock.
And maybe just quickly, for anyone less familiar, an ADR, an American Depository Receipt, it's basically a certificate, right? Often held by a U.S. bank.
That's it. It represents ownership of shares in a foreign company.
Huh.
So it lets you trade, say, a Russian company like Gazprom right there on the New York Stock Exchange, like an IOU for the foreign stock.
But that whole mechanism just collapsed almost overnight.
Instantly. The reaction was incredibly swift. You had the major U.S. exchanges, NASDAQ, NYSE, they just slammed the brakes on. Trading halts on pretty much all significant Russian-linked securities.
And it wasn't just the U.S. acting alone, was it?
No, not at all. The London Stock Exchange, which was, a huge gateway for Russian capital into the West, they did the same thing. Suspended trading in, I think it was 27 firms almost at the same time.
Wow. And these weren't just like quick pauses to let things cool down?
No, that's the key.
Yeah.
These halts very quickly escalated. They moved towards definitive delisting processes for several really major Russian companies.
So effectively wiping their presence off Western market boards.
That's a good way to put it. And then compounding that, you had the first wave of sanctions hitting the actual financial plumbing.
Right, the infrastructure itself.
Yeah, several major Russian banks got kicked out of SWIFT, the global messaging system for banks. And then networks like MasterCard and Visa restricted operations. So the basic ability to execute transactions related to these foreign-held securities just vanished.
Okay, but hold on. If SWIFT and Visa, like you said, the basic plumbing, if they were blocked so early, how did any cross-border stuff happen right at the start, even before the official delistings? Wasn't there just immediate confusion?
Oh, total chaos. Absolute gridlock. Even if your ABR certificate was technically still active for a moment, the big depository banks, they couldn't do the necessary currency conversions anymore, or the security transfers needed to manage the underlying shares in Russia. The pipes were clogged immediately.
And this market freeze, it didn't just hit the stock price. There were these sort of secondary explosions, too. The sources mention Ozon Holdings, right? The big Russian e-commerce player.
Yeah, that's a fascinating little detail, but really important. When NASDAQ suspended Ozon's trading, well, that suspension lasted more than 7 dealing days.
Okay.
And according to their bond agreements, that longer suspension legally triggered something called a delisting event.
So it wasn't even a full delisting, just the prolonged suspension.
Exactly. And that trigger gave the holders of Ozon's convertible bonds about $750 million worth, due in 2026, the right to demand early repayment.
Wow. So a move intended to stabilize the market actually flips a switch in a bond contract, putting massive immediate financial pressure on the company itself.
Precisely. It's a stark example of, the unintended consequences when you start using finance as a weapon.
It really shows how interconnected things are for companies listed internationally, especially with debt tied to those listings.
Right. The market halt itself, just being frozen, could be way more dangerous than even watching your share price slowly slide.
Okay, so this is where the story, I think, gets really complex, because now you have these two, opposing legal forces smashing into each other.
Exactly. Russia obviously saw its big companies, its national champions, suddenly trapped outside its control. So their first move was to try and force them back home, legally speaking.
How did they do that?
Well, it started with a piece of legislation, Federal Law number 114 FZ, that basically just said no more trading Russian shares using these depository receipts outside Russia. It forced the termination of those DR programs.
Okay, stop the foreign trading mechanism.
Then came another law, FZ number 319 FZ. This one introduced what they called mandatory conversion.
Mandatory conversion, what did that mean practically?
It was supposed to be a way for foreign holders, like U.S. investors, to apply to convert their ADRs directly into the actual Russian shares.
Bypassing the U.S. and European banks, the depositories?
Right. Go straight to the source, get the shares onto the local Russian registry.
Sounds like a potential escape route.
In theory, yes.
Yeah.
But in practice, for your average U.S. retail investor, it was a nightmare. Trying to navigate the Russian custodians, getting all the paperwork right.
And there was a deadline, right?
Yeah, a tight one.
Yeah.
It expired back in November 2022. Most people outside the big institutional players just couldn't manage it. It was too complex, too fast.
Okay, so Russia's trying to pull the assets back in. Meanwhile, the U.S. isn't just sitting back. You mentioned OFAC, the Office of Foreign Assets Control. They were working on the other side of this.
They were working to systematically ensure that even if someone did manage that conversion, the assets would still be basically unusable for a U.S. person. That was the counterpunch.
How did they do that? What were the tools?
Well, the biggest hammer early on was the SDN designation, especially designated national.
Okay.
When they listed a huge state bank like Bank as an SDN, that was April 2022, it meant U.S. persons were legally banned, prohibited from any dealings, direct or indirect, with Bank or its property.
Any dealings at all. So those Bank shares.
Irrecoverable, at least through any normal market channel. Legally toxic for a U.S. holder.
But the U.S. went further than just hitting specific companies, didn't they? They went after the core infrastructure. I remember reading about the National Settlement Depository, the NSD.
Yes, that was a crucial escalation. Sanctioning the NSD, which is Russia's Central Securities Depository. Think of it like the DTC here in the U.S.
The central hub for everything.
Exactly. That happened later, I believe June 2024 was the expansion targeting it directly as an SDN, along with the Moscow Exchange, MOEX, and the National Clearing Center, NCC.
So what did sanctioning the NSD immediately do to those shares people might have converted?
It slammed the door shut. It sealed the trap. Because the NSD is where almost all securities transactions in Russia are ultimately held, cleared, or settled.
Oh.
So by designating the NSD itself, the U.S. effectively said any Russian share, even from a company that isn't sanctioned, if it's held through the NSD system, it's now considered a blocked asset under U.S. law if a U.S. person is involved.
So it's like a checkmate move in this regulatory battle. Russia says, convert your shares, bring them home.
And the U.S. says, fine, but we're sanctioning the home itself so you still can't touch them.
Guaranteed immobilization.
Precisely.
Yeah.
Which leads us directly to where those converted shares actually ended up, these infamous Type C accounts.
Right. You hear that term constantly in the SWAT materials. Type C accounts. If Russia forced conversion, where did the shares physically or digitally land? What are these things?
Okay, think of a Type C account as a kind of digital jail cell, specifically created and mandated by the Russian government.
Oh, hey, jail cell.
Yeah, it's a special, highly restrictive account structure. And it's required for any assets held by investors coming from what Russia deems unfriendly jurisdictions.
Which means?
The U.S., the EU, the UK, Canada, Japan.
Yeah.
The list is long. Basically, anyone sanctioning Russia.
So if you're a U.S. investor and maybe you did manage to convert your Gazprom ADR, your actual Gazprom shares ended up in one of these Type C accounts.
That's exactly right. You technically still have ownership rights to the underlying shares. You own a piece of Gazprom or Lukoil or whatever it was,
Right.
but they're captive. You used the word trapped earlier. That's perfect. You own the deed, like you said, but the door is locked, bolted, and guarded.
So you can't trade them.
Trading is incredibly restricted, basically impossible for a U.S. person. They're completely illiquid. And maybe the most frustrating part for holders.
Let me guess, dividends.
You got it. These Russian companies, many are still profitable. They might still be paying dividends. But where does that money go?
Into the Type C account.
Straight into the blocked Type C bank account associated with the shares. The U.S. owner can't get it out. No repatriation, no access. It just sits there, trapped along with the shares.
And this regulatory tug of war, it didn't stop there either, did it? Russia tried another move even after the U.S. sanctioned the NSD.
They did. It shows how dynamic this was. In October 2024, Russia issued Presidential Decree number 840. This ordered Russian custodians to physically transfer the shares out of the now sanctioned NSD
Weird too.
to local individual company registrars. The idea pretty clearly was to try and get the shares out from under the shadow of the NSD sanction. A technical workaround.
Okay, move the chairs on the Titanic, basically. And OFAC's response?
Almost instant neutralization. OFAC dropped FAQ 1197 in November 2024.
Another FAQ. What did this one say?
It was crystal clear. It explicitly stated that U.S. persons must continue to treat these Russian shares as blocked assets. Period. It doesn't matter if they're held at the NSD or if they got transferred to a local registrar under Decree 840.
So the location of the share certificate doesn't matter anymore.
Doesn't matter. The blocking status, according to OFAC, attaches to the U.S. person. It's blocked because you are a U.S. person dealing with these specific Russian assets, not because of the specific vault they're sitting in.
That really clarifies the legal stance. The U.S. government sees the U.S. citizen or entity as the point of control or vulnerability, and the block applies to you, full stop. Okay, let's maybe categorize the outcomes here. The sources suggest there were basically 3 different paths depending on the company involved.
Yeah, broadly speaking, 3 models emerged. Model 1 is the simplest, but also the most severe. Fully blocked and basically irrecoverable.
And the prime example there is?
Sberbank. Once it got hit with that SDN designation, that was it. There's no conventional market way back. As a U.S. person, you're legally forbidden from touching those shares. They're essentially worthless from a practical standpoint.
Okay, Model 1, SDN means game over. What's Model 2?
Model 2 is probably the most common outcome. Forced conversion that leads directly into trapped value.
This is where the Type C accounts really bite.
Exactly. This applies to the big state-linked companies like Gazprom or maybe firms like Lukoil, which actually ran these sort of successful but time-limited conversion windows.
So in these cases, maybe an investor actually navigated the complex conversion process.
Right. They jumped through all the hoops, got the ADR converted, only to have their actual Russian shares land squarely in that illiquid Type C regime.
So they hold paper, theoretical value, trapped dividends, 0 market access.
0. That's the reality for many.
And then there's Model 3. This one sounds like the outlier, maybe the only path with some strategic hope. Corporate restructuring. The example everyone points to is Yandex NV.
Yandex is definitely the most interesting case study here. Yandex NV, the parent company, was domiciled in the Netherlands, which is key.
Not Russia itself.
Right. And they undertook this incredibly complex, high-stakes corporate divorce. The sources say they managed to sell off their entire Russian operational business, everything inside Russia.
For how much?
The reported figure is around $5.4 billion, sold to a consortium of Russian investors.
That sounds like a huge number, but was it a fair price?
Almost certainly not. The sale had to happen under Kremlin rules, which basically mandated a huge discount. The estimate is around 50% off market value for any foreign assets being sold off like this.
Ouch. But it was the cost of getting out.
It was the price of freedom, essentially. Because the entity that remained, the Dutch parent company, now renamed Nebius Group, it holds all the non-Russian international businesses.
So it's insulated now from the Russian financial system, from the Type C rules.
Exactly. It's clean, non-sanctioned, and internationally focused. This corporate surgery, painful as it was, positions those remaining international assets for a potential relisting or reliquefaction once NASDAQ eventually lifts the trading halt on Yandex NV.
So for U.S. shareholders who held onto the Dutch parent company's shares throughout this, they might actually see real market access again someday without getting tangled in the Type C mess.
That's the potential upside. It's really the only scenario described where U.S. shareholders might regain liquidity without facing the direct impact of the Russian countermeasures and the Type C trap.
Okay, let's zoom out then. Big picture. What does all this complexity, these different models, mean for the average U.S. shareholder who finds themselves holding these, well, immobilized assets today?
Yeah, the bottom line. First, market value. It's purely theoretical at this point. There is 0 marketability for these assets if they're stuck in Russia or linked to SDNs.
Why 0?
Because U.S. sanctions explicitly prohibit U.S. citizens from opening the brokerage accounts you'd need in Russia to trade on the Moscow exchange. And they prohibit dealing with the sanctioned infrastructure like the NSD or MOAX. You literally cannot execute a sale.
And beyond just not being able to sell, holding them has actually become a legal problem.
Yes, this is critical and often overlooked. It's shifted from being a passive investment on your statement to an active compliance burden. It's a liability. That OFAC FAQ 1197 we mentioned, it doesn't just clarify the blocking, it mandates action. U.S. persons holding these blocked Russian securities have to file an initial blocking report with the U.S. Treasury.
Okay, report what you hold.
And then, crucially, you have to file an annual report of blocked property every single year you continue to hold them. You are legally required to track and report these frozen assets to the U.S. government.
Wow. Okay, so you can't sell it, you can't get income from it, and now you have annual government paperwork to deal with. What possible recourse does a U.S. investor have to recover any kind of value, even if it's just acknowledging the loss?
Realistically, it comes down to taxes. Tax loss harvesting.
Okay.
The IRS has rules, specifically Section 165G, that let you claim a capital loss deduction when a security becomes worthless during a tax year.
So you write it off?
That's the main avenue for immediate financial relief, yes. Claiming the loss against other capital gains or income within the IRS limits.
But isn't proving when something became officially worthless kind of tricky? I mean, Sberbank, okay, SDN designation seems pretty clear. But what about, say, Lukoil shares sitting in a Type C account? It technically still exists.
That ambiguity is exactly the problem. When is it legally worthless versus just practically unsellable? It can lead to disputes with the IRS down the line.
So what's the advice?
Many tax professionals, according to the sources, advise more definitive step, formally abandoning the securities.
Abandoning them. How do you do that?
It means taking a clear, documented, overt action to permanently surrender all rights and claims to that security. You basically declare you're walking away from it entirely.
And the benefit of doing that?
It locks in the capital loss for that specific tax year. There's no more ambiguity about the date of worthlessness. You abandoned it on date X. The loss occurred on date X. It creates certainty for tax purposes, a necessary, if painful, legal step to realize the financial hit.
Okay, so if we connect this all to the bigger picture, it feels like the fate of this private U.S. capital, these trapped shares, is now completely entangled with these huge geopolitical decisions about Russian state assets.
That's absolutely the end game here. Any hope of recovery for the private investor holding these Type C shares, it's entirely conditional on both sides dismantling these restrictive regimes. It has to be reciprocal.
Mino.
The U.S. would need to lift the SDN designations on crucial infrastructure like the NSD and MOX. And simultaneously, Russia would need to repeal those laws like FC 114 and 319 and completely abolish the Type C restrictions.
And neither side seems eager to blink first.
Not at all. And the main leverage point in the standoff seems to be that massive pot of frozen Russian sovereign assets, state money. Central bank reserves estimated around $300 billion.
Right, the money the U.S. and its allies froze and are now talking about using for Ukraine's reconstruction.
Precisely. And that discussion directly creates the ultimate retaliation risk for the private U.S. capital we've been talking about.
How so?
Because Russia has already put a legal mechanism in place, another presidential decree, that allows Russian courts to authorize the seizure of U.S. assets in Russia as compensation if the West moves to confiscate Russian state assets abroad.
Seizure of U.S. assets,
Huh.
including private assets.
Including private assets. And what's the most obvious, easily identifiable pool of U.S. private assets sitting right there inside the Russian system?
The shares stuck in those Type C accounts.
Exactly. Those Type C accounts, holding the converted shares of U.S. investors, effectively become the legal inventory, the readily available targets for Russian counter-seizure if Western governments go ahead and confiscate the sovereign funds.
Wow. So your trapped shares could literally become hostages in this larger geopolitical game.
This deep dive really shows, I think, that in modern conflicts, the small private investor often ends up as, well, a pawn in this high-stakes chess match over state asset seizure and counter-retaliation.
And even if, somehow miraculously, liquidity returned tomorrow.
The market impact would likely be brutal. Imagine all that trapped capital, years of pent-up selling pressure suddenly hitting the market at once. It would probably cause a massive price collapse as everyone rushed for the exit simultaneously.
So this journey, it's really laid bare how these opposing regulatory systems clash to create this very specialized financial trap, a genuine case of regulatory warfare. You should now have a much clearer picture of the freeze, the legal force of those Type C accounts, and, importantly, the ongoing compliance burden if you hold these assets.
Yeah, and if we connect this to the bigger picture one last time, think about the current debate. It's heavily focused, understandably, on using those frozen Russian sovereign assets to help fund Ukraine's reconstruction. That's where the policy energy is. However, what really stands out from analyzing this specific situation is the potential boomerang effect. Your trapped private assets, the ones we've been discussing, could legally become the first things Russia grabs in retaliation.
So here's the final provocative thought for you, the listener. As policymakers weigh using Russia's $300 billion for foreign aid What happens to the private U.S. citizens whose own trapped assets are now directly in the crosshairs for counter-seizure? Is there a plan to protect or compensate them? And how does that potential vulnerability impact your own decisions about compliance, abandonment, or just holding on right now? Something to definitely mull over.
Indeed.
Disclaimer. All analysis is based on publicly available sources and may be subject to revisions or differing interpretations. The content is for educational purposes only and does not constitute investment advice. Conduct your own due diligence before making investment decisions.
And if you found this deep dive interesting and want to hear more analyses like this, please subscribe to us on Apple or Spotify podcasts. Just search for Deep Value Investing.